Surging populism and related perils for trade are damping expectations for global economic growth. The International Monetary Fund lists political discord and inward-looking policies among threats to assumptions underlying its latest forecast of world output. In this month's edition of its twice-yearly World Economic Outlook, IMF projects global growth of 3.1% this year and 3.4% in 2017, compared with 3.2% in 2015. In April, IMF projected growth a tenth of a percentage point higher this year and next. It bases its projections on three assumptions. First, gradual normalization of conditions in economies under stress, including those of commodity exporters. Second, gradual slowdown and rebalancing of China's economy, with medium-term growth rates higher than the average for emerging market and developing economies. And third, resilient growth in other emerging market and developing economies. Those are what IMF sees as threatened by, among other things, protectionism. In the IMF's words, the Brexit vote and the ongoing U.S. presidential election campaign have highlighted a fraying consensus about the benefits of cross-border economic integration. Concerns about the impact of foreign competition on jobs and wages in a context of weak growth have enhanced the appeal of protectionist policy approaches, with potential ramifications for global trade flows and integration more broadly. In addition, IMF notes that concern about income distribution strengthens as incomes stagnate. It worries that consequent uncertainties will encourage companies to defer investment and hiring, thus slowing near-term activity, while an inward-looking policy shift could also stoke further cross-border political discord. The chief economist of Fitch Ratings expresses similar worry in a statement accompanying release of his firm's bi-monthly Global Economic Outlook, which underscores downside risks to economic growth in advanced countries. The economist, Brian Coulton, warns, the rise in populism seen in many advanced countries could be a precursor to increased trade protectionism and growing fragmentary tensions in the Eurozone, both of which would increase uncertainty and damage prospects for private sector investment. The message from IMF and Fitch Ratings is clear. Populism is hazardous to economic growth, the main driver of oil demand. Oil producers anxious about the price of crude should not welcome it. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective, which appeared first in text at www.ogj.com on October 7, 2016.